Hello, everyone. Welcome once again to BRG 2020. TCS is a very proud presenting sponsor for this event. We've had some really exceptional sessions so far, and I'm very happy to bring to you one more on platforms past, present, and the future. For this session, I have with me colleagues from two very esteemed organizations, and then Hanu from TCS. Todd McDonald, he's the co-founder and the chief product officer at R3. R3 as an organization needs no introduction. They are the makers of Corda, which has been the darling of the entire industry in the space of blockchain. And then we have with us Mike J. Walker, who is the Senior Director of Applied Innovation at Microsoft. And we know Microsoft is doing some exciting work in the space of platforms as well. Hanu heads technology and partnerships for our blockchain services. And along with this esteemed group of people, I'm here to talk about platforms, where they have been for all these years, where they are now, and where do we anticipate they'll go in the future. To begin with, I would first request Mike to kind of just share his few thoughts on where does he see platforms moving on, and what are some of the cool things Microsoft has been up to.
Yeah, and thank you so much for the invite and the opportunity to speak. So yeah, platforms is it's one of those words that's overloaded, right? I mean, it means a lot of different things to a lot of different people. And sometimes we get ourselves into this situation as technologists using these words that are so encompassing that they could go down multiple directions. And I think what is happening in the industry is we're actually starting to solidify on what some of these terms mean. And, like in the title of this presentation, past, present, and future, the past, we've always had these platforms to some degree. They just weren't very efficient. I typically refer to these, you might hear me interchange platform with ecosystem, because I view that the platform is actually enabling the outcome of building a vibrant ecosystem. And we've had these ecosystems for a long time. It's just the technology we used just wasn't very good, or it was hub and spoke, it was point to point, and it didn't really allow us to scale at a rate in which we could potentially scale, which is where we're at today. And today, we've got more data than we know what to do with. And you'll hear me say, pithy things like big data without big insights is a big problem. And that's where we're at. We're in a position where we've got a kind of this transition period today, where we've got the old world and we've got the potential of the new world, where we've got everything is computing around us. We've got all these great IoT sensors that's getting all this rich and vibrant data. We've got AI algorithms that are able to compute and provide analysis on a probabilistic perspective and give us insights that we didn't realize that we wanted or needed. And that unlocks other opportunities as far as the endless connections that we have in the world, whether that be with the IoT sensors that I mentioned, or the ubiquity of things like 5G, the latest generation of Wi-Fi standards, mobility, etc. We're finding that everyone's connected everywhere, anytime, and that's really allowing us to take the platform, the digital ecosystem construct, to the next level and build out something that is very, very vibrant. And how we are looking at this is, we're looking at it from a perspective of how do you re-architect your business? How do you protect yourself from future threats? And today we know that there is an enormous amount of fraud in our supply chains. We know with the pandemic that our supply chains are extremely brittle and fragile, right? And having a platform-based approach allows us to take a very linear supply chain that is compartmentalized from supplier A to B to C to D to E, etc. And it allows us to flatten that model. And it allows us to have dynamic relationships. And you may have heard of terms like a platform based economy or a data based economy. And these are all terms that are describing the effects of these platforms and digital ecosystems. And until I got really deep into this, and just a short little piece of my background, before joining Microsoft, I was over at Gartner, and I was the VP of Tech Innovation and CTO Strategy over there. And I had the opportunity to be able to engage with customers that were doing leading things around these platforms. And surprisingly enough, uh, some of these things that we're solving for are very, very boring, but they're extremely impactful to our businesses. For example, did you know that there is about 200 billion, yes, billion? I could hold up my pinky and do that. And pardon the cheesy 90s and 80s references. Um, and it's allowing us to really start to get at the crux of some major, major challenges in the industry. And so, where all this is going from a future perspective is businesses are already starting to look different. If you look at the top 10 companies based on market capitalization, these are either digital first or digital ecosystem first companies. Your folks like Microsoft, Amazon, Alibaba, Tencent, the list goes on. These are all companies that have gotten that this paradigm of building a platform that supports not a one-sided or a two-sided marketplace where you've just got a buyer and seller relationship, but really the future is in these multi-sided relationships where your customer could also be a B2B partner. And we've seen that come to life in a very real and material way when you look at a company like Amazon, and you look at their business model, and they've got many different types of ecosystems all living within one ecosystem. But two, you see that the relationship to their customers is very, very dynamic, and things like the byproduct of the relationship, like the data that's generated from an Alexa device, or the data that's generated from requests, or that's bought and sold from Google and Facebook, there is new forms of monetization. So when we look at that future world, one, our interactions with our customers are going to look very, very different, and they already are starting to go down that path. Two, how we value companies starts to significantly change as well. If you were a bank and if you weren't profitable for a couple years, you wouldn't get your banking charter renewed. You would not be around for that third or fourth year. If you're someone like Facebook or Google and you're not profitable for 7, 8, 10 years, oh, that's okay. If I'm Airbnb and I'm, valuated at 32 billion, and your closest competitors, companies that have been around for many, many years, your Hiltons and your Marriotts, valuated at, respectively somewhere around 25 billion, you know, and Airbnb doesn't own a single asset. So the stakes are extremely high for companies. And when I talk to executive leaders, what I get from them is there's a heightened sense of anxiety. It's not fear, because they know what they need to do. It's anxiety around how we're going to address this with the workforce that we have and with all the legacy that is surrounding them. So that's kind of our position. You'd asked what Microsoft's doing. I think I'll keep it very simple. Microsoft is essentially a platform company, and I think we were early pioneers in uh, that concept, especially when it came to cloud computing. Maybe we were even too early to the game when it came to platform as a service. But you can definitely see that Microsoft's value prop to its customers is not to go into their businesses. It's to create a platform that allows customers to be successful using technology that continues to go up the stack. And and in the very simplest way, that's what we're doing, and we can get into all sorts of nuances as we continue this conversation.
Absolutely. That was a really good talk through what's happened in the past and where what the ambition lies, right, in bringing communities together and creating what I call our prosumers out of consumers as well, and having them kind of jig around based on the role they are playing at that moment. Which brings me to a segue with Todd over here from R3. Todd, I hear David and your entire leadership all the time and trying to reinvent, Corda, and every CordaCon that we attend and meet you at. And it's so exciting to see how you don't rest in the laurels of everything you all have achieved. Where do you, as an organization and as a person, see platforms having been, and the journey that
Well,
lies
first of
ahead?
all, Preeti, thank you very much to you and to TCS for having me here today, and also for the very kind introduction. And speaking of CordaCon, we just recently wrapped up this year's fully virtual event, which it was great to experience that, to see some new friends and old friends, but we did definitely miss mingling with our friends at TCS and others in person. So hopefully, fingers crossed for next year. And it was, as I was reflecting on what Mike was talking about, and equating platforms to ecosystems. And if we look backwards first, and then where we are today, and maybe where we're heading on the platform side, with R3 as a company, and for those that aren't familiar, when we founded R3 2015, the company itself was in effect a non-technical platform when we first started, even before we embarked on work on Corda, which is our open core blockchain platform. And it really was focused on the potential for this new kind of software, which is enterprise blockchain, how the potential for that to really be the new operating system for these for existing ecosystems, right? Or for these ecosystems that could form. So when we started R3, we started life as a single, say, bank consortium or ecosystem 5 years ago or so, a few gray hairs ago as well. And we realized pretty early on a few things that, and I think we'll have those discussions now in the coming hour, that one of the benefits of this new form of multi-party platform or system that blockchain can engender is not to force upon that a destination platform that I think lots of folks are familiar with, and in knowing banks fairly well, especially now, they do have a tendency to fall prey to this destination platform sort of risk or fallacy of trying to get people to their party at the exclusion of everyone else's party. So we realized that with R3, we had the chance to do that differently as a company in an ecosystem. And then fast forward a couple of years, 2017, we committed to an open platform approach with Corda. And I think it was for the reason that we knew that the way that these technologies usually evolve and these ecosystems evolve, it's from this bottom-up approach where we were one of the few companies that were focused on building this protocol, this operating system for these networks and these ecosystems. Potentially, since there was a gap in the market from the likes of those normal platform providers like Amazon and Microsoft not potentially entering that space, and also because a lot of these were started from market segments out. So we got our start in financial services, which encompassed at the time capital markets and quickly insurance and increasingly in areas that have no existing sort of platforms or networks that are connected through software, like in trade finance. So bringing us to today, we realized as a company that it was incredibly important for, instead of going down the same path of a single destination platform, can we as a company support multiple networks, multiple ecosystems with a set of common technology? And then what we were fortunate, I think, as a general industry, that was the right approach. And we're starting to see now into 2020, from a platform perspective, there's a few things that are happening. There is consolidation because, as from the customer perspective, the Wild West days of the early crypto and blockchain space has started to consolidate, and we see consolidation is definitely a theme, and that's good for those that are participating on both sides of this market. And I think we're moving into seeing some of these specific business networks and business ecosystems either live or going live. And I think in the conference there's talk of the likes of B3I, which is one of our earliest customers in the insurance space, trying to stitch together in a distributed way a new way for the reinsurance market to operate. And then looking ahead to where we're going, R3 as a company, Corda as a platform, really as a product suite. and looking at what has happened over the last year of this rush to digital transformation that we're all experiencing, both in our personal lives and also in the business context. I think we're entering this business network and this solution phase in what we're doing. So we're continuing to see a lot of demand for a general purpose platform like Corda being taken to market with partners like TCS and others to solve problems we can never even dream of when we started the company 5 years ago. But we're increasingly seeing the desire for and the emergence of specific business network solutions tied to these common industry problems that really a multi-party blockchain system can uniquely solve for. And these are old problems that potentially have new ways of being solved, and that's why we're seeing them happen today. And these are, very old industries, like with trade, insurance, and financial markets generally. So, we'll talk about what the future may hold, but we're very excited with how things have developed over the last few years, and incredibly excited for where we are right now as an ecosystem around Corda, but also generally across the market.
So, Hanu, would you agree that the days of the Wild West are over and you don't have, one platform or one crypto IPO coming up every day? Because Hanu is a guy who tracks them like on a day-to-day basis, and he has this like entire view of what's going on. I would really like him to spend some time talking about his thoughts. Being an organization like TCS, we take a very backside approach to the whole thing. I think it would be very interesting to hear from him on where he thinks this market is headed. Hanu? We will have to pause over here. I think
Yeah, we are going to have to cut that right there, right after you say Hanu. And then when he comes back on, his device got disconnected. Then we will just start with his question or his answer to that question.
Okay.
Now he's gone.
It's perfect. The timing could not have been more perfect.
Yeah,
Right.
Actually, quite honestly, it was perfect timing. What's really funny is that the beginning, when you were talking, my entire computer was really chugging, and your video and audio were so off. I was like, well, nobody else is saying anything, so.
Well, yeah, I saw there was a lag for me as well for the first minute.
Okay.
Me too.
Okay. Good.
Yeah.
All right, here he is. Hanu's back. Here we go.
Hear me? Sorry, right at the right moment, thing crashed.
Yeah.
Hear me now?
Yes.
We can hear you now. So, Preeti, go ahead and just restate the question real quick, and then I'll put Hanu on, and we can cut him in those two places.
Thanks. So, Hanu, Todd spoke of the Wild West and how the days of the Wild West are over when you had platforms and IPOs popping up every day. I know you are a prolific observer of the market and the way the platforms have been operating, and you have a list of your top 10, top 5, and top 30 even. Walk us through your thought process and where you think this has been and where the platforms are headed.
Sure. Thanks, Preeti. First, let me talk about, from TCS perspective, how we see the world of platforms, especially, in the blockchain space. In fact, as Mike has alluded to, the word platform is often used and misused in many ways. So it's a very highly overloaded term, especially in the area of blockchain and DLT. So when we look at the platforms, though we also use the word platforms, and then it is obvious from the context. If I take a step back and take out the context, when we talk about the platform from our perspective, we mean essentially there are 4 different things we often refer to as platforms. So to be very specific, the first one is what we call the protocol platforms. So these are the platforms like, the Corda, Corda Enterprise, and, Hyperledger Fabric and the others. We call them as, protocol platforms. That's number one. And when as I said, there are 4 different things that we call platforms. One is the protocol platforms. The second one is the application level platforms. These are the applications that you develop on top of protocol platforms like Corda. In fact, when Mike talked about, that he equates ecosystems and platforms as the same, at least in my mind, I equate them in the context of talking about the application level platforms. So that's the second category, is how we see it. Then the third category for platforms in this space is all the infrastructure platforms, the cloud infrastructure platforms, like Microsoft Azure. Azure is a broad term, but within Azure, there are certain tools and facilities and infrastructure that's available for protocol platforms for blockchain and DLT. So that's a cloud infrastructure platforms. That is the third category. And the fourth, in general, when we talk about platforms, essentially these are the various tools and technologies to support either the protocol platforms or application platforms or even cloud infrastructure platforms, so that all of them working cohesively. So when I talk about platforms in general in this space, I mean one of those four things. When it is obvious as to what I'm talking about, which are the four I'm talking about, we normally just use the word platforms, based on the context, what I'm talking about. When it is not obvious, I normally use the prefix it with, protocol platforms or application platforms or, infrastructure platforms or even tools. So that's one view. Now, when I look at each one of these areas, let's look at the first category, which is the protocol platforms. So it is fascinating to see how this field has evolved over the past couple of years. I see the signs of it stabilizing now. No, in fact, I always equate this area as to how the rapidly the developments have taken place in the last couple of years. At least in my mind, I equate it to how the NoSQL systems area was at around 2010 or so. If you look at the NoSQL systems area, it basically originated in 2006 when a couple of papers were written. In fact, when we took a look at around 2010, there were about 150 platforms, and one new platform was getting introduced on an average once in 3 weeks or so. Till a few months ago, the world of DLT and blockchain was in that state. When we took a look at about a year ago, there were more than 100 platforms, and at that time, almost a new one was getting introduced almost every couple of weeks. Though a lot of them were specialized, a lot of them were just I think tokens which are misnamed as platforms. Nevertheless, there were more than 100 platforms, and platforms were continuously evolving. So we have come up with a framework as to keep track of this world. So we have come up with what I call a three circle model. An outer circle, whenever a new platform gets introduced, we start tracking it. We put it in what we call an outer circle. If there is any platform on which some decent use cases, let me step back. So when something is introduced, normally it gets introduced via a white paper and nothing else. So we put it in an outer circle. Then when decent use cases, the signs of decent use cases emerging, then we start tracking those more closely. I call it a middle circle. And a few months ago, there were more than 100 in the outer circle. There are about 30 or 35 in the middle circle. Then the reason why we have come up with this framework is we want to be ahead of the curve. From TCS perspective, we have our services side of the business within the blockchain services, and we have the application level platforms that we are investing on. For the application level platforms, we have standardized on protocol platforms that we want to invest, where we want to build the application level platforms on. R3, definitely Corda is one of them. But on our services side of the business, our customers, they determine in many cases, sometimes with our advice, sometimes independently as to what are the protocol platforms that they want to explore and they want to build their applications on. So we needed to have a way of keeping track of or making predictions on which are the platforms on which our customers may start using, and then build deep skills ahead of even the customers, even think of using them. So we have 100 plus on the outer circle, about 35 or so on the middle circle, and then we make predictions on where our customers might go, which are the protocol platforms that our customers might use. Those are the platforms that I put, that I call that in the inner circle, where we develop, we always develop deep skills on and using various ways. That is for the protocol platforms as to how we have always kept track of. If you go to the next slide, then from a TCS side, as I said, there is we have the services side of our business where, we use whatever platforms our customers are using and then build applications to solve their businesses on them. Then we have the application level platform side of a business where we are building certain applications, which is, these platforms, I equate them to, as Mike said, as ecosystems. These are the areas where we are building various application level platforms, be it so these are the 8 or so ecosystems or platforms that are of great interest to us, exploring or curating or building assets or building platforms. These are the areas in which we have been operating on. Things like digital identity, whether it is skills marketplace that we're building on top of digital identity, whether it is multi-platform loyalty. So these are the application platforms that are of great interest to us, that we think has a great potential going forward. And then, as I said, then the third bucket that I talked about is the cloud infrastructure. Like, for example, if you take Azure. Now, if I look at the customers, when we look at the applications in the blockchain space, some of them would want to run those applications. They want to have the nodes within their data centers, and some they want to have those nodes on the cloud infrastructure providers, within the cloud infrastructure. So then we keep track of how the cloud infrastructure platforms are evolving. It's fascinating how they themselves are evolving in different ways. For example, if I look at Azure provides 3 different mechanisms in the DLT blockchain space. For certain protocol platforms, Azure provides blockchain as a service. For certain platforms, they provide the what we call a template-based tools using which you can easily deploy the business networks on the VMs. It has the VMs and certain tools on top so that you can easily deploy the networks. That's the second model that Azure supports. Then the third model, which is just use the virtual machines, and then you use your own deployment and monitoring tools. So these are the 3 models that that Microsoft Azure makes available for DLT and blockchain. Similarly, if you look at the other cloud infrastructure providers, they probably broadly follow a similar mechanisms but they have chosen different blockchain platforms to support. Or in some cases, for example, even in the case of, let's say, Corda Enterprise, R3 itself has certain tools, which is the type 2 in nature that provides to make it easily available. So these are the various possibilities in the case of cloud infrastructure. Then, as I said, there's a fourth bucket is about various tools, whether it's for the security testing, security audits, and performance, benchmarking, all of that, identity tools, and the networking tools. Again, some of these are also getting supported in different ways. Cloud infrastructure providers provide certain tools. The base the protocol platform providers provide certain tools, and but this is a area where it is not very mature yet. So company, TCS, we have written a lot of our own tools to integrate all of this and make the deployment easier. So that is where the current blockchain space is. And it's very interesting to see how even within each area, things are rapidly evolving. We will probably get a chance to discuss some of that, during the Q&A.
Thank you for that, Hanu. Very interesting perspective, tying it all together. I feel like I will be doing a sort of sacrilege to the industry if I don't mention the interoperability word, given what Hanu just spoke of right now, with everything coming together. I have two questions. One, is it an issue yet? And two, have we solved it? And if I may, a subset of that is the question of how are we co-opting or cooperating with each other rather than competing with each other in such a busy ecosystem? Who would like to take a stab at an answer first?
I can give it a shot, Preeti. So, it was, and also Hanu, it was amazing to listen to your model on the market, on the platform side, and thank you for putting us in the inner circle. Appreciate that. The early days in the industry, the focus was understandably on proof of value, right? So it was very much, is there any value here? And if we found some evidence of it, can we actually prove that out? And in listening to Hanu's talk around platforms and the tools around that, increasingly over the last year or two, and the increasing focus for R3 has been, how do we decrease the time to value? But we've collectively with customers who identified there's something valuable here. How do we reduce that time to value? So getting live is incredibly important. And now we're at the point where for these potentially these application specific ecosystems or networks, this next phase, interoperability, now is the right question to be asking. I think I was smiling before because I started getting this question back in 2016 before we even had version 1 of our software. It was always hard to interoperate with thin air across all the different platforms now. But we're not nearly in a mature phase for the technology, but we're approaching that. And what we've been focused on, and what are we hearing from customers importantly around interoperability? It is, with these new ecosystems going live, the demand from our customers in the near term is, how do I integrate to my existing systems? First, it was from an infrastructure perspective, and increasingly it's, how do I ensure that my ERP system understands what my new trade finance blockchain network is doing, as an example. And increasingly, it was going back to the TCS frame around these application ecosystems, integration to existing payment rails, existing identity systems that different enterprises are running. That's really the interoperability integration that has been important so far. I guess the next horizon is going to be, we at R3, we do a lot of work with central banks and those communities. Central bank digital currency is clearly an area of focus around what does it mean to have truly fungible digital cash, right? So I think as we start to get into these production deployments of central bank digital currency, which will happen, it's all about timing, that question will become even more important. But for now, we're incredibly focused on this time to value, shortening this time to value. And then from there, with these live ecosystems, how do we help them integrate to existing services, existing networks, especially and increasingly, on the payment side?
Yeah. So if I took a stab at this, I think when we look at interoperability and solving that problem, it's a tough problem. And we've been trying to do that for a very, very long time. Decades and decades, we've been trying to interoperate with other customers and partners, etc. Pulling back from my financial services days, I was a chief architect for a bank. I worked for insurance companies. Was heavily involved in Corda back in the early days, if you're familiar with that insurance standard. And when you look at this interoperability, you got to think about it in kind of multiple levels. That first level in a very similar model that Hanu had mentioned is, really at that protocol layer, the pipe. How am I going to connect, organizations together and give them the opportunity to exchange data? And so there needs to be some standardization there. And with blockchain and with other technologies, we've done a good job there. And I think that solves directly some of those problems. Two, kind of on top of that, is how we package information and how it's presented to the end customer. And again, blockchain provides a lot of capability there. Doesn't solve all the problems, but it solves a lot of the problems. But the third level, which is the hardest, is to make sure that at the data level, the actual information itself, when you say status, do you mean yes, no? Do you mean one, two, three, four? Do you mean, a binary, what have you? And so there are lots of subtleties in each one of these layers. But when it all comes back to me, when we talk about interoperability, is there's a difference between integration and interoperability. Integration is the technical side of the house. Interoperability is the business side of the house. And when we look at the business side of the house, we not only need to look at the protocols and the technologies behind the scenes, but we also need to understand the processes in which we're trying to enable to make sure that even if we were able to be interoperable, is it legal to do it? Are we breaking any regulations by doing it in this particular way? And so this is where the complexity, I believe, really starts to get into the ecosystem construct. Is that now, we have to figure out not only the connection points between our organizations, in which we were able to cheat a little bit earlier because make point to point connections or hub and spoke models, and we were able to isolate these things. But now, as we start to open this up more and more, we really have to take a strong look at the governance around all this. We need to look at, most importantly, the business model around this. Someone mentioned earlier multiple ecosystems. I think that's the world we're going to live in. It's going to be an ecosystem of ecosystem model. These ecosystems, in a similar way that Hanu had mentioned from a more of a technical perspective, from a business perspective, we've codified that there's three primary types of business models, and those business models pivot off of decision authority and risk. And so you've got founder-led models where you've got one company that may want to digitally optimize their supply chain and be more efficient with their trading partners, kill reconciliation processes, streamline things, be able to do digital twins and modeling of their business processes. And that founder-led model allows you to do that, and you're still not breaking anything. You still have a platform, but you're using it in that particular business context. But second, maybe you have a partner-led model. And this has been made popular, over the years. Where, give you a simple example, we all are business folks. We travel, and you are probably part of some sort of alliance, right? The Sky Team Alliance, the One World Alliance, etc. And so this is where multiple companies get together and they say, "Hey, look, it's in our collective best interest. We're typically focused on one area of our business, and let's go and work together to build this out." And this could be two or more companies embarking on this type of joint venture. And there's lots of scenarios where we see that. But third, and oftentimes we get lulled into this, and this is where I'm going to really challenge some of the listeners here, is the third model. We get lulled into, and we think that, oh yeah, well, that's the ideal model for everything, which is more the cooperative model or a co-op led model. And in that model, that's where you do spin off a nonprofit or a for profit. It's essentially an independent entity. And those integration points look very different as well. So when we think about interoperability across these three different models, they look vastly different. And the level of permissioning needed, the level of control needed, the level of risk that's associated with it significantly changes over the course of these three business models. And what we start to see is we start to see usage patterns. So we saw in the founder-led model, we see a lot in terms of internal digital optimization. So if you're like I'm just going to throw a random company out there. If you're a FedEx, if you're a Maersk, and have shipping containers, and you're trying to optimize that process, your internal processes, great. Now, on the other side of the house, if you're trying to standardize, like let's say the Risk Stream Alliance has done, you're trying to standardize claims data, and it's in everyone's best interest to be able to have that claims data standardized. However, You as Nationwide Insurance or Allstate or Progressive or whoever, you've got very specific processes that you want to be able to monetize and be able to control for your competitive advantage. The challenge here is looking at the company's competitive model. Also, it's we live in a world of capitalism. Until capitalism dies, a lot of this stuff starts to break down pretty quickly because there's no business incentive. The shareholders won't like us giving away all of our IP that could be monetized. And so there's this tug of war between openness and fluidity of information, and also kind of running a business and the actual requirements around that, getting the lawyers involved, etc. So it might be a different answer than you were expecting. But when I look at interoperability, I look at interoperability as a business question, not a technical question, but a business question that just so happens to need technology, and we need all these great things. But that's less of the problem because we've been doing interoperability for a long time, and I can solve many of these challenges, believe it or not, with a legal contract. If you do bad things, you will go to jail. And surprisingly, that works in a number of cases. That's not the ideal case. That's not what we want to do. And that's not what we want to evangelize. However, we just got to keep our eye on the prize that in the technical model, it's all about that data standardization, putting meaning in context. Because, like I said earlier, we got more data than we know what to do with. The problem isn't data. The problem is putting meaning behind that data. So that's kind of my perspective on it.
Yeah, it's fascinating listening to Todd and Mike, bringing in, expansive perspectives to interoperability. If I take a technical view of things and take a look at the interoperability, yes, I totally agree with Todd. Now is the time to think about interoperability. With the ecosystems, the platforms evolving and then consolidating, or a few winners emerging on the platform side. With that, now that the applications are becoming a production scale, ecosystems are getting built on the platforms. I certainly agree that now is the right time to start thinking about interoperability, because what is going to happen is that multiple business networks will evolve. Things like multiple payment networks or multiple loyalty networks. That's going to be that's going to be a fact. That's the nature of the world. Now, some of these networks, they may be built on the a few set of, they will be built on different sets of protocol platforms. So there will be a need to, and even if you have the, let's say, payment networks, payment systems, different payment networks, there will be a need to connect them together. But you would need to connect different business networks across, across domains to have to be connected. Things like a loyalty network will definitely have to be connected to a payment network, because ultimately you're talking about monetizing your loyalty points. So there are various scenarios in which there are various reasons why you would want to interconnect different business networks. That's the reality. Now, when you take a technical view of this interoperability, so we are talking about the brass tacks is you have different networks. Now there is a need. If we have an application level platform running on within one specific business network, it will have to interoperate with a different business network, either for pulling that information from the other network. That's the easiest part. Pulling information from a different network, that is one type of interoperability. Second type of interoperability, which is much more complicated and sophisticated, is having to transfer the assets across the networks. Okay, at a broad level, these are the two levels of interoperability. But then if you look at the details of each, then you are talking about the objects on in different networks. That means, what about the characteristics of the objects? What about the syntax of the objects? What about the semantics of the objects? Semantics is roughly about business process that Mike talking about. I'm probably putting it in the technical terms. So they may mean different things. So there probably is a need to standardize the syntax and the semantics, or come up with a overall ontology, and then standardize the syntax and semantics for the for these things to be interoperable. In fact, if you look at some of the there are various standardization bodies that are looking at different aspects of this. For example, the Transportation Alliance Beta is focusing on standardization of the objects so that you can transfer the information easily in an understandable manner across different systems. So there are different bodies emerging like that to support these two types of interoperability, being able to pull information from different networks, consolidate information from different networks, or even the more complicated thing, which is transferring of the do an atomic transfer of assets from different networks. If I look at the platforms, it's interesting to see different protocol platforms are making different things available to make it easy. For example, the Corda makes the interoperability for the applications that are built on, if let's say if you have same payment networks, but there are different segregated networks, all built on Corda, for example, you can make it easily interoperable because that's built into the protocol of Corda. And all that you need to, of course, you need to take care of certain nuances, agree on the notary because you need to transfer the notary from one network to the other. If you set aside those intricacies, it is easily interoperable, right? So, but different protocol platforms similarly have different ways of dealing with it. So yeah, it's a fascinating subject, but I think progress will be made across different protocol platforms by different standardization bodies to enable the information or assets to be exchanged across different networks.
So just briefly, Preeti, so I agree with Anu in going back to your example of NoSQL 150 platforms and the slide you put up before, it's easier for us to address these challenging questions now because there has been consolidation. From our perspective, we in the market run into a handful of other platforms. Really, there's Corda, there's the Hyperledger family, namely Fabric, and variants of enterprise Ethereum, and that's really broadly 90+% of the market. So as we're starting to see different market segments, in effect, you look at insurance, you mentioned Riskstream and B3I on Corda, the ability, what's under our control is to allow for that interoperability across those disparate business networks that are using that same protocol, which we've been really focused on because we can control that destiny of that, right? And now we're looking beyond that, with different organizations, Interwork Alliance and others that are looking at what's as Mike put it, what is the right level of interoperability to look at from a messaging perspective or an asset perspective. And when you get into those conversations, they need to be grounded back on the business problem. That's why I think the digital currency one is a really interesting one to look at, cross-border payments and digital currency, because that drives it's a business outcome you're trying to drive an interoperability solution for. And then on the technical side, there's lots of fun things to talk about around encumbered assets and near atomic swaps, where you get into some level of a trusted system. But those are, we in the industry, we get into a tendency of diving into that kind of more nuanced or technical detail, where it's really just back to that business problem. And especially, I can't stress it enough, we leap to the interoperability side before we actually get to value on the initial ecosystem, then it's all for naught anyway.
I want to echo that, and essentially that was one of the key messages I want to make sure that I leave folks with here, is that the technology is great and it gives us an enormous amount of capability. However, if we look at the problem that we're trying to solve, the platform or the blockchain part, the percentage of the mix of what we need to decide there is 5%, maybe even less, right? That's the easy part. The hard part is around, all these other business aspects that we've kind of been alluding to in the periphery. Now, from a technical perspective, there are some very real business problems that these ecosystems are solving. First and foremost, we don't talk about this enough, which is, blockchain is a great tool to master data. So we spend millions and millions of dollars on MDM, master data management systems, when blockchain does that inherently in the protocol. So, a lot of times when I deal with customers, I say, hey, look, let me throw a potentially controversial topic out. And we explore it and we find that, hey, this actually could be a legit type of scenario for usage of blockchain. Non traditional. However, it is a key attribute of that technology. But second, when we talk about interoperability, the interoperability patterns when you build your digital ecosystem with blockchain, because you could do it without blockchain, but when you do it with blockchain, the type of integration and interaction, probably interaction is the better word. It's more peer-to-peer data collaboration than a much more forced ETL job, or we're going to FTP something, or it's going to be a web service or what have you, right? And so the interaction patterns are very different, and it streamlines things significantly when you're able to do that. Self-sovereign data. I can give control of the data to that business unit or perhaps even that user. And so when we talk about interoperability and let's say healthcare, because that's on top of most people's minds right now. I worked with one company that was using blockchain to essentially tell the end patient where all his or her data was residing. I checked into an emergency room in Phoenix, the data's there. I did a 23andMe, my data's there. My family doctor, the ER, the this and the that. And to be able to have one single pane of glass to be able to see where your data is extremely helpful and useful. But two, what if I didn't want my employer to see some problem that I had? Maybe, something that may impact their perception of broken leg, and maybe I'm a first line worker or what have you. I could selectively start to pull that data back. Now, that's built into the protocol itself. And that's one of the key benefits of blockchain is to be able to do things like that. But also, we're able to simplify the governance. I think that's another key component here when we talk about interoperability, we talk about integration, is governing these things. I spent a ton of years in banking. I can tell you it is a pain in the rear trying to map all this stuff together and govern all these different providers, essentially babysit the data quality and have a small army of people to verify all this data. And all that is built in the protocol, which is really cool.
That it is so cool that you are all talking about this, and I couldn't help thinking about the consumer in this whole conversation. And Mike, when you said that you propose a non-traditional solution sometimes because people sometimes fear the whole blockchain concept because of how complicated it may sound at the fore, we sometimes amongst us say, let's not even use the B word. Let's tell customers we're going to solve your problems, and let's not worry about the technology in the back, because that is what people like you are empowered to do, to solve challenges related to interoperability, cross-platform talking, getting APIs, etc., developed on top of it, and then moving things along. So here is my question, and I'm hearing this quite a lot with the whole buzz of platforms turning into ERPs or morphing into pseudo ERPs and whatnot. One, is there any leg to that talk, because it's coming out from various sources, and why is that, like why is there a confusion about that sort of a terminology? And second, if you were to prophesize the next avatar, if you would, of platforms over the next 5 years, how would they be? And to your mind, how should they be?
All right, so since we're
So
all going to play the virtual tug of war here and all that great stuff, I'll kick it off here, and we can kind of bounce around some ideas. So I think when I talked earlier about the business models around these ecosystems, I think it goes back to that question. And when you look at these companies and how they want to approach these ecosystems, another word to use would be maybe a marketplace. Depending on what they want to accomplish, that might be the end goal for their company. So if I'm Apple, Apple is a great example of an ecosystem. Alibaba, another great example. Does Apple want to open that up? No, they don't want to open that up. Does Amazon No way. Right? That's why, we see, over 50% of all the packages on a UPS or FedEx truck is an Amazon package, right? And so, we can't lose sight of how companies fundamentally work. They report to shareholders. Shareholders want to profit. They want to conquer the world. That's probably one of the complications of capitalism, right? Is the whole goal is to be a monopoly, right? And then to eventually get broken up to then again to be another monopoly. But I digress. So I think the challenge will be what is the focus. I definitely see there are ERP-ish like things. It's not necessarily. I wouldn't categorize it as the same sort of design pattern necessarily, because there's a lot of problems with how we did that in the 90s, in the early 2000s around ERP and the complexities around that. But there's definitely a tendency to swing hard that way and have these more walled gardens because, frankly, your business stakeholders, they want to get maximize the return on their investment. Sometimes, not all the time, sometimes it is in their best interest to have a closed ecosystem that they are able to kind of white label things, etc. The banking industry has been doing this since the 70s. I mean,
Yes, but Mike, this is the challenge, and I think where it's our job is not to convince companies to go against their self-interest. Obviously, that's a sucker's game. There are examples of use cases and networks or ecosystems where the participants have either are realizing they have no choice but to open up and to become part of a broader ecosystem. So talking about banks, yes, given if they had the choice, they would have a closed ecosystem and they would a destination platform. But if we look at an example within trade finance, there are business and risk drivers that are encouraging or forcing, depending on your perspective, banks to address customers or reach customers in different ways, right? So they are being, by market dynamics, being incentivized to look at different, potentially more cooperative or more open platform models, so they can reach customers that were either now with the current system are uneconomic to service because of risks and because of risk factors. It just doesn't make sense to extend financing to a certain segment of the business population. And the way that it doesn't even have to use the word blockchain, but the way you're engendering these peer-to-peer and connected ecosystems allows these banks and others to enter into this market in an economic way. Because at the end, you're 100% right when you're talking about your models. It has to be economic for these participants, or else there's no point.
I'll bring another one more perspective as to where the platforms are going, and then I will end it with a question for Todd based on one of the announcements that they made at the CordaCon, which I find very intriguing. First, let me talk about the perspective as to where the platforms are going. When I talk about platforms, of course, both Mike and Todd talked about ecosystems. So in my mind, they are essentially talking about where the application platforms are going. So let me take a technical view of things and look at the protocol platforms. Ultimately, if you look at all the the three circle model that I talked about, the variety of platforms. When I look at the brass tacks, where they differ essentially are a few fundamental building blocks. The amount of centralization or decentralization, that's one parameter. The security, the privacy, the performance, and these are the some of the aspects where these platforms differ right now. They follow different models, thereby different scalability, performance, security, privacy, all of that. I see that a lot of lateral moves are being made by different protocol platforms, and looks like they will give make all of this configurable so that you can create a different variety of ways in which you can configure the systems, even to the element of the amount of decentralization. Like, for example, as an example, look at Ethereum, complete decentralization. Everybody gets to see everything. Now they have acquired Quorum. Quorum has a private transaction so that only some parties can see that. So from a completely decentralized model, they're going towards, at least the Quorum part of it has this private transactions, and the others I can understand that they're probably doing it, because that's what is of interest to the enterprises. I don't think a few years ago, a lot of companies, Fortune 1,500 companies, are looking at Quorum. I mean the Ethereum. Not so much nowadays because of the privacy and the way organizations perceive the privacy and like a lack of privacy. They want to keep some data private. So a lot of these moves are being made in the platform. So a lot of these things are converging. So interesting thing is things like a couple of years ago or maybe a year plus ago, people are but I cannot on blockchain, but I cannot develop a Visa kind of systems which require 50,000 transactions per second. Those kind of systems blockchain cannot support. I always used to push them back and say, so how many systems do really need Visa kind of throughput? Not many. So do you really need? So do you really think that's a constraint for the application that you are constrained? Used to be my my pushback about a year and a half ago. But if you look at, for example, some of the latest performance results, let's say things like Corda Enterprise, with DTCC, they have achieved about 6,500 trades per second, which translates to about 19,500 transactions per second. So a lot of moves are being made by different transactions to take care of that. So a lot of these things probably they'll become configurable so that you can get a variety of things on different platforms. That's one thing about how platforms are moving. The question that I have for Todd, based on the the announcement they made at CordaCon, is so as it is, if you look at the Corda Enterprise, so they have, apart from the protocol platforms, you have made a lot of other tools available to make the set up the business networks. You have integrated identity services, you have integrated network services, you have integrated notary services, so that I can easily spin up the the business networks. Now with that's one part that you have been doing for a while now. Then the second thing is Corda has been a foundational technology for some of the trade finance, popular trade finance ecosystems, Voltron and the Marco Polo. You made an announcement, a very intriguing announcement about bill of lading (EBL) at CordaCon, which that got me thinking. So you looked at the most foundational element that's required for trade finance, which is the bill of lading, which you are integrating into the Corda platform. I'm assuming the idea is that now, once that is integrated, I think by the end of sometime next year it will be available. Then I can easily build the higher level trade finance transactions on top because bill of lading is already integrated into it. So this is the first time that I've seen you made some kind of I don't know, it's a lateral move or a different move where you are building foundational elements required for the domains into it.
Right.
And perhaps then you will probably, I don't know, maybe you're thinking about building some functional modules, the likes of ERP, make the, Corda as the likes of ERP. You have the foundational technology, protocol platform, and various functional modules. Is that the direction that you're going? I'm very intrigued by that move.
I'm not sure, Hanu, but I would love to send you an application to join our product marketing team. It's fantastic. Very briefly, we did make an announcement recently, the acquisition of intellectual property that allow us to digitize bills of lading, which has been done, but in our view, and I think more generally in trade finance in certain segments, as I mentioned before, we're moving past the phase of proof of value. We're moving past the phase of which protocol should I use. Those decisions have started to be made, and these ecosystems are going live. And from an R3 perspective, in areas where we are getting that pull in the market in trade finance is clearly one. You mentioned Contour, Marco Polo. We have many other projects and these ecosystems. What is the foundational services that we can offer that can allow for this peer-to-peer financing to happen? And digitizing a bill of lading is a foundational element where we're competing against a piece of paper that's stapled to the side of a ship in some ways. So to be able to enable that for our ecosystems that are live today and going live in the future, we find that it's very impactful because it goes back to that time to value. They can get to the business of solving the problems at the ecosystem level and not have to worry about that foundational service or technology.
Hanu, I hope that answers your
certainly
question.
does. You know, in fact, in a way, that's what I kind of guessed. It's a foundational aspect. You know, once you have the bill of lading digitized and then load it into the, you can build on top. Then any trade finance, even when I get a shipment, what are the various elements of the shipment supposed to be? If they're already digitized and then loaded, then I can easily integrate with the ERP systems in the receiving systems and easily track at the item level. So
right. You can go up to a more tokenized format where it's more of a bearer asset. You can also horizontally look at and think about more trade type documents to digitize beyond the bill of lading. So there's a lot on the roadmap, definitely.
Yeah.
So many prospects, and as the audience can see, we are enjoying this conversation a lot, that we didn't even realize it's been 65 minutes past, but that is all the time we have. Microsoft and R3 are our dear partners, and we love such conversations with them and such intrigue and working closely with them in developing our horizon for the future. There's lots to look forward to, and we hope over our sessions in the next coming years, we can talk a lot more about how far we've come and how far we have to go. Thank you so much again, Mike, Todd, Hanu, for your time. And it's such a great session. And have a good one, everybody. And we look forward to hearing from you if you have any questions for our speakers. And enjoy the rest of the BRG 2020. Thank you.